Hello, everyone. It's Steve with Aptera Owners Club. On October 21st, 2024, Aptera put in a new filing with the SEC. And so I wanted to take a look at it, and here it is. So this is they're dating it October 18th, 2024. And if you scroll through here, it's just a lot of the same boilerplate stuff that we've seen in all the other filings. Talking about their advantages, their risks, dilution, all this other stuff. Okay, nothing has changed. The one thing that's changed is if you looked at the liquidity and capital resources, kind of like almost halfway into the thing, it says here, we have primarily relied on issuing common stock to fund our operations and capital needs. To secure the necessary capital for vehicle validation and production, we launched a best efforts convertible note offering seeking to raise up to $60 million in July of 2024. This is the U.S. capital offering that they're talking about. As of the date of this offering, so that's October 18th, 2024, we have raised approximately $0.4 million, $400,000 in this offering. So out of 60 million, they've raised $400,000 of this offering. We anticipate that this and the convertible notes offering, combined with our existing cash and potential future stock offerings, will provide sufficient funds for the next 12 months. There is no assurance that we will be successful. If we cannot raise sufficient capital, we may need to pursue other financing options or reduce investments in product development and significantly curtail our operations. These actions could materially affect our business and financial outlook. To ensure we may remain on schedule with our production timeline, we are actively producing $60 million in financing. I believe this $60 million in financing is talking about the U.S. Capital Global offering, U.S. Capital Group offering, the convertible note offering. This financing will need to be completed in one or more transactions that are closed within a short period of time, approximately 3 to 6 months. The reason they need to close in a short period of time is because of their ongoing burn rate. Because they have a certain burn rate, and they're burning cash every month to pay for the rent and pay for their personnel and all those things. So that kind of stuff cannot be used for tooling and to buy parts and stuff. So they must close it within a short period of time to overcome their burn rate, or else the money is just going towards their burn rate. So they must close this in approximately 3 to 6 months to ensure the capital we receive is directed towards our production goals as opposed to their burn rate. Once this funding is secured, we expect to enter low volume production within 9 to 12 months. So this 9 to 12 month time frame has not started yet, because they've only raised $400,000 of the 60 million. Now, if you look back at this, if you go back to 924, notice of sales of unregistered securities. If you look at that, that is this form that they had to fill out, a very short form that they had to fill out. And basically, this is the first sale of that convertible note. And you see right here, total offering amount, $60 million. Total amount sold, $200,000. Remaining, $59,800,000. So that means on September 24th, they finalized the sale of $200,000 of the convertible note. In the next month, so as of October 18th, 2024, they're up to 400,000. So they closed another 200,000 in the last month. This is not a rate that's good. They cannot be fundraising $200,000 every month, and that doesn't even cover their burn rate. $200,000 does not even cover their burn rate. So this means one of a couple of things. Either one, large investments, like let's say someone was interested in buying $20 million of convertible notes. That means that those just take a long time. And I'm sure they do. I'm sure they take more time than a $200,000 convertible note purchase. The $20 million convertible note purchase is taking a long time. So one possibility is they have several of these large sales kind of in process right now, and the financing is going well, and they just need to close that out. So that's one possibility. The other possibility is that the fundraising is not going well, and this represents how much fundraising that they're doing. If that's the case, then Aptera is in some trouble financially, because they will run out of money without getting this $60 million. So we don't know, and we haven't gotten any information from Aptera about how things are going. They've always been very positive in their statements. Um, Over the past 2 years, we've heard several times that there's lots of very interested investors, and they're working through them. But it seems like they have not materialized. The large investor has not materialized to this point. So that's a little bit concerning. But I think now that PI2 is driving, and I think the thing that's going to get large investors interested is seeing a working PI build. I think the terms of the convertible note are actually quite good. One of the things I had concerns about was the valuation of the company. They're self-valuating themselves at around $800 million, which I think is fairly optimistic given the current situation of other EV stocks at this point. Um, uh, so I thought that maybe one of the problems is that the share price was too high. But with the convertible note, the share price is not what it is now. The share price is what it IPOs at with a discount. So that risk for them of Aptera overvaluing themselves does not apply to the convertible note buyer. So I think in many ways the convertible note is a safer and kind of a better deal for the large investor. Number one, it is considered a loan, and so they have first right to any assets that Aptera has should they have to liquidate or declare bankruptcy. They're ahead in line of people that just bought the Regulation A stock. And then two, they get interest. And then three, their price is determined by the IPO price with a discount. So if the IPO price turns out to, let's say, be $2, they're buying it at a discount from $2, so less than that. Whereas everyone who bought it at $10, they will have lost 80% of their investment at that point. Now, the flip side is, let's say Aptera does very, very well at the IPO, and IPOs at $20, then the convertible note people are going to be buying at $20 plus discount, and the people who bought at $10 a share are going to be doing well because it doubled their things. So it's a little bit of risk on that end. But I think looking at the way the market is, I personally think that the IPO value is not likely to be $10. That's just my thoughts. I don't know. Let me know if you guys think differently in the comments below. I mean, that's complete speculation from a person who admittedly has very poor financial decision making and a very poor track record of buying stocks and selling stocks. So definitely don't take investment advice from me. But that's just my opinion. But so what we do know is that Aptera's only raised about $500,000 since July. So that's in 3 months, they've raised $500,000. So it needs to be a lot better. So I'm really, really hoping that there are several large multi-million-dollar transactions that are just waiting to be closed out, and that we hopefully in the next couple of months there's an announcement of them closing 10, 20, 30, 40, 50, or maybe even $60 million of this convertible note, because we need this to happen in a short period of time, 3 to 6 months, and then we can start the clock on low volume production. All right, so this is obviously not great news, I think. I mean, it could be not bad news depending on how things are going, because maybe there's a bunch of big investments in the works, or it could be actually bad news. But on the surface, it's not great news. Like, it would be great if they said, as of this date, we've raised $40 million of this $60 million offering. That would be like amazing news. Now we'd be very happy because we know that we're well on the way. All right. Well, let me know what your guys' thoughts are. Thanks for watching. Have a great day.